A fair amount of recent guests on this program have expressed a pessimistic outlook on where the economy and markets are headed. But what do the optimists think? A number of you have asked us to bring on an expert willing to predict that better times lie ahead. Well, you asked, and we're delivering. Strap in for a wide-ranging interview with self-described optimistic economist, Dr. Pippa Malmgren.
And I think that the risk is that people are so caught up in the next Great Depression and all of the possible downside risks that what they miss is that this recovery is going to be very sharp and very fast.
Hello and welcome to Wealthion. I'm Wealthion founder Adam Taggart, welcoming you back for another week of making sense of money and the markets. And this week we're joined by a particularly accomplished guest. We welcome Dr. Pippa Malmgren to the program. Pippa is an economist who makes sense of the world economy by writing books, founding tech businesses, advising policymakers around the world, and through her public speaking. She's the founder and CEO of Indranet, an accelerator for personal and professional brands. She's also a partner at the Monaco Foundry, a startup incubator, and she is special advisor to Avonhurst, a legal and consulting firm in the UK that specializes in policy, capital raising, and deal making. She's also been a presidential advisor to former President George W. Bush, and she has been recognized with the following accolades, and here I'm going to read them. She's one of the most influential economists in the world, one of the top 100 women in blockchain, fifth most powerful woman in finance, and the third most important influencer on robotics on Twitter. Her recent book, The Infinite Leader, also just won the International Press Award for Best Leadership Book of 2021. And in her spare time, she serves as a judge for the Queen of England's Enterprise Business Awards and on a slew of impressive boards. There's an awful lot more to her CV, but I'm going to end it here in order to have enough time to actually interview her. Pippa, thank you so much for joining us.
Thank you. Thank you for having me.
Well, you're very welcome. Look, Pippa, I'd like to start by asking you the same question I ask all of our guests at the beginning before I introduce any of my biases. What is your current assessment of today's economy and financial markets?
So I gather from talking to other people that I'm just about the most optimistic economist alive on the planet today. I have a very upbeat view. I think that as we come out of the pandemic, we're actually now in a very interesting window where everything gets determined more by attitude than by reality. In short, we have record amount of money available in the world economy. So there's no shortage of cash to work with. We have a wave of entrepreneurs who are bringing their energy into building what will be the economy of tomorrow. And digitization is occurring at an epic rate, all of which sets the groundwork for an extraordinary recovery. And I think that the risk is that people are so caught up in the next Great Depression and all of the possible downside risks that what they miss is that this recovery is going to be very sharp and very fast. Now, that doesn't mean that everything succeeds. And it's kind of, I keep saying, it's like being in a quantum experiment. Many things will happen simultaneously. There's no one narrative that dominates this recovery story. So if you're looking for a negative story, you can definitely find all sorts of bad news. But if you're looking for a positive story, I think you'll find more good news than you'll find bad news.
All right, great. And I will be transparent and say for the guests that we've had on this program of late, you definitely are on the other side of the spectrum from them. So it is actually very refreshing to be able to have a conversation that's more on the bullish, optimistic side. Let's see, there's a recent quote you made that you said, when you have record sums of capital looking for a home and a huge wave of entrepreneurial spirit, and those two things find each other, then that can be very powerful. What are some of the biggest sort of powerful applications, maybe the most promising trends that you see coming down the road because of the combination of that entrepreneurial fervor plus all this capital that's getting pushed out into the world?
Sure. Well, the first thing is that business models have been literally broken by this whole pandemic experience and by innovation, and particularly financial innovation, we're seeing an entirely new financial system come to life. And we could talk about that around crypto and sovereign digital currency and all of these things. So together, what it means is that you can literally invent new business models now. Uh, Whatever held true before is no longer fixed in concrete. And I think this is going to be the hardest thing for investors, is to comprehend that the very rules of the game have changed. And so simple things like, I know a British pizza company that, by all rights should have gone out of business when they lost their entire B2B customer base and instead reinvented themselves in 10 days to become a B2C business, took on Domino's and wildly succeeded. So even in mundane things, you're seeing radical transformation of business models. So I think the key thing is that this isn't going to be about a particular sector or a particular country. It's going to be about who has the most imaginative capacity to reinvent the business model.
All right, and I think much of that business model reinvention, and don't let me put words in your mouth here, but I think that's being driven by a lot of technological innovations, blockchain probably being a tremendous one there. You have said in your recent writings that you are a big fan of technology. I guess my question is, and you see a big, bright future for the sector. What specific applications right now in technology do you think are the most important ones for us to be watching? We mentioned blockchain. I'm sure that's a part of it, but are there other major tech, developments, innovations, releases, et cetera, that have your attention?
Yeah, definitely. So the first thing about technology is that it's always overhyped and underutilized at the same time. So you can be in this strange situation where something that has had a ton of hype around it hasn't actually been integrated. So I've been in the drone business, for example, for some years. That's a great example where, it's clear that drones can literally act like a prosthetic that allows you to see an asset on the other side of your farm or the state or the world with incredible accuracy. And yet very few businesses actually deploy them for this reason. But almost every technology has exactly the same issue, which is, again, overhyped but underutilized. Where do you make money with technology? Utilization, right? Not the hype. So it's important to look at things with a clear eye and see where is the actual use case for it. And that's what you're going to bet on. I think it's the same thing in financial technology, financial innovation. Now that real economy companies are beginning to accept crypto as payment, okay, now the rubber hits the road and there's going to be a way to make money. That's a totally different thing than the speculation that this is an interesting new way to do payments. It's when does your fast food restaurant accept that kind of money?
All right. That's really interesting. I love that. Overhype it, underutilized, but actually utilization is where you make your money as an investor. So, it sounds like the lens you look through is try to find those areas where the application potential dwarfs the actual deployment so far, and try to invest in those areas to sort of ride the utilization wave. I see you nodding here.
Totally. That's the key. And again, it's not going to be about a sector. It's going to be about the intelligence with which a technology is deployed within that sector, right? So even if we look at Amazon in the early days of its business, it's fundamentally a technology company, and people saw it initially as a book selling company, right? It's taken a long time for people to understand that it wasn't a book selling company. And so it'll be the same. You're going to have to look under the surface to discern when a company is truly committed to surfing the wave of innovation and technology, as opposed to simply implementing something in a one-off kind of way.
Okay, so I do want to get to some questions that I know a lot of our viewers that maybe are concerned of a lot of the trends that our most recent guests have been asking. But before I kind of get to the potentially negative side of the story, I know that you're very connected to the political establishment. You're sort of at the intersection of commerce and investing, and how politics can support or thwart that. And I know you've written recently on trends in the U.S. elections. You're based in the U.K. and you're very active there as well. I guess in terms of right now governments, but let's just focus on America first, are pumping a ton of stimulus out there. President Biden has big plans for infrastructure building. Trillions of dollars are coming out for that. He's trying to raise trillions more. Is that going to be a tailwind to what you're talking about here? And I guess at a higher level, because of your close proximity, are you optimistic or not about the policies right now that governments are pursuing post-COVID?
Right. So I am not in the camp that believes that throwing more money at the economy makes it work better. But we've done it, and there it is. So we have a record amount of money in the system. I think the risk now is that we start to get a little bit of inflation. And this is still considered kind of a heretical thing to say, because the view amongst the high priesthood of economics and central banks is that inflation is dead. But I think that we are beginning to see it come back to life. And it's partly also because supply chains have been broken at both ends, the supply end and the demand end, the China end and the US end. And in that situation, where there are fewer firms making the things that we're after and more money chasing those things, surprise, surprise, we're watching prices go up. And I think people have been surprised to see property prices rising, to see hard assets. I was looking at a list the other day of all the commodity prices that are so exponentially up in the course of the last even year alone. So to me, these are early indicators of inflationary pressures. Now, you might say, well, okay, so we're going to go from 1% inflation to 2% in the United States. Not the end of the world. True. But that is a massive change for an asset allocation. That's a huge change for a pension fund, for a sovereign wealth fund, any central bank. And it's really important for someone who's poor. And so I see it as an issue because it has the capacity to foment more social unrest, more social fabric kind of questions that are already very important in the realm of politics. At the same time, the early stages of inflation usually are accompanied by rising stock markets and rising hard asset prices. So I'm not saying this is a sell signal, and this can go on for a long period of time, but at some stage, you remember that at the beginning of an inflation, everybody benefits and nobody pays, but at a later stage, everybody pays and nobody benefits. And so when is that transition? I'm betting right now that's 2 to 3 years before we start really getting uneasy about inflation. But it's possible the markets get more unnerved earlier than that. So that's one reason stock markets are going up, because they're anticipating these higher asset prices, and probably rightly so.
All right, great. So this is the territory I sort of wanted to get into, so it's a great segue. So on one hand, we have a lot of opportunity for investors and for innovators, right, to come in and create disruptive new business models for doing things better. On the other hand, we have record high valuations today, and not just record high prices, but when you look at valuation metrics, right, they're in most cases at all-time highs, right? So, some extremely so, right? And at the same time, to your point, we have rising cost inflation, right? So all input costs are kind of shooting the moon right now. You talked about the list of commodities. I've been watching one that gets updated every couple of weeks, and year over year for almost any kind of general base commodity, most of them are up double, if not triple digit percentages since a year ago. I mean, it's crazy, right? At the same time, wages are not rising nearly that fast. In fact, we still have millions of households that are, out of work, having lost jobs due to COVID. And I also, one of the issues with technological innovation is it oftentimes tends to replace human labor with technology, and there's lots of reasons why that can be very good in the long run, but it actually can create short-term issues if you're putting people out of work faster than you can put them to productive use elsewhere. So in light of all that backdrop, even though there's good opportunity to create value, has the market potentially gotten so far ahead of itself with current valuations that it may have priced in too much already?
So I think quite the opposite. Now, I'm going to be giving away my age by saying this, but you remember when the book came out, Dow 10,000? And people were like, no, it'll never go to 10,000. That's such a high number, right? And
I'm giving away my age by saying, yes, I do remember that.
Okay. So here's the thing. It was outrageous at that time, and given the money supply of the globe at that time. But we have vastly expanded the money supply of the globe. Every single nation, certainly every major nation from China to the United States, has been printing money like crazy. You have a debate with the Fed about what do we mean by printing money, but what we know is we've got record low interest rates for a very prolonged period and record stimulus, both through central banks and through sovereigns on the expenditure side. So the old number doesn't make any sense. So when you say record high valuations, compared to what? Compared to a world that had a lot less cash in it. Now we got a lot more cash. It's got to go somewhere. So where is it going to go? And again, a little bit of inflation, it has to go somewhere, because if it's sitting in your bank account, you're getting killed, because inflation is like an acid that's constantly eroding the value of your savings. That's why you jump into buying an apartment, you jump into buying stocks. You go, well, let's get a little bit of crypto or whatever it is. So this is the whole point, of course, of low interest rates and record injection of capital, is to make it so painful for you to do nothing or to sit on your cash that you begin to invest, and that's what causes the recovery to come back. Now, can you do it without causing inflation? There's not a good track record on that. And I remember Paul Volcker many years ago sort of said in his very oblique kind of way, if you think that you can control it once you unleash it, you're out of your mind. Like, think again. But
Yeah.
again, he's not talking about a Weimar Republic kind of inflation, but he is talking about the kind where Dow at 10,000, it's like, what do you think happens to NASDAQ with the stimulus that the world has seen? It's going up.
So let's tug on that thread just a little bit. So totally get the argument that, look, there's so much getting pushed out there. It's just going to get into prices, and certainly to your point, you're not going to get anything by just sitting in cash, except to have the inflation eat away at the purchasing power of your cash. So you're kind of, to your point, either willingly or with the spear point of inflation at your back, getting pushed out that risk curve, right? But let's say that inflation does pick up, and you've mentioned we're already beginning to see the early signs of that. And let's even use your 2 to 3 year potential timeframe when it really begins to become a concern, right? And I think most of the guests that I've interviewed recently share your opinion that once the inflation genie is out of the bottle, the Fed is going to have a really hard time putting it back in there. So what's the Fed going to do? Well, it's going to have to start tightening. Maybe it's going to have to start, God forbid, raising rates, et cetera. What does that do to an economy that is so hyper financialized and so utterly dependent upon rock bottom record low interest rates here? And many people think the Fed is actually kind of stuck in a corner here, that it really can't tighten even if it wants to, because the economy is so dependent on it now. Does that become kind of like a potential existential threat for the economy, that it just collapses under the austerity?
Well, that's one way to think about it. I think about it a
Doesn't
little
have to be the right way. I'm just curious.
I think about it a little differently, which is, first of all, innovation is not to be underestimated. And people are being forced by very difficult circumstances to reinvent themselves and their businesses. And I think I've been so struck during lockdown by everyone I know in technology, building, rebuilding whatever they were doing. And now they have much better business models that are vastly more efficient. So I think that that's a permanent, continuous process that we can depend upon. So that's one thing that stops the, fall apart disaster scenario. Second thing is, look, rate hikes are normal. They should happen. If you raise rates once or twice and the whole economy collapses, okay, then we have a whole different story. You should be able to raise interest rates many times before you're actually tightening anything, because there's so much liquidity in the system. So my expectation is when the Fed does start raising rates, first of all, they're going to tell you way in advance. Second, they're only going to do a tiny bit at a time. And actually, this means that stock markets will rally on the rate hikes. They'll go, oh, you mean the coast is clear? You mean the recovery is real? You mean everything's okay? Then the hikes become a confirmation that the economy is doing fine, rather than the trigger for some unfolding disaster. And finally, let me just also say that I've also made a very complex argument in recent years that when the debt burden is so high that it literally cannot be paid down, like even if you went and knocked on every citizen's door and took 100% of all their assets, you still don't have enough to pay the debt off, then there's only one other way out, right? One way is you inflate, but you can only do it to a limited degree. The real way out is you literally have to abandon the whole system of money and accounting and invent a new one. Now, people go, you can't just do that. That's crazy. And I'm like, you know what? It's not crazy. And it's how it's happened throughout history. The last significant time that occurred was in 1834, when the British moved from a system that had worked for 1,000 years using what they called tally sticks, which is where we get the term to tally things up. And the term the stock market comes from that particular financial system. And we invented a completely new technology called paper money. And that was introduced, and the citizens at the time were outraged. So I'm never going to use this. I like my tally sticks. Well, the equivalent today is we're inventing a new system of money that's based on digital coins. This is the Bitcoin sovereign crypto story. And I'm not saying I advocate it from a value point of view. We could talk about that separately. But from a financial innovation point of view, it is literally the creation, and blockchain as well, of an entirely new financial system. And will it let you step from the old one that was broken into a new one that works? Yes. And have we done it before? Yes. It's happening again.
All right. Well, that's a great segue into the whole Bitcoin cryptocurrency topic. And look, we could talk all day about that alone. But you've already answered a good part of what I was going to ask you, which is, how much credence do you put in that technology and platform going forward? It actually sounds like a fair amount. So
we can talk about that. Let's talk about that for a second.
Well, yeah, let's talk about that. And I'll let you go, but in your answer, and I'll let you run wherever you want to with your answer. But when you do, if you can talk about kind of the blockchain versus the crypto space in general, and then when you talk about a replacement currency, is Bitcoin the horse you think is the right one to bet on, or is it so early we're still going to let 1,000 flowers bloom and see which one proves to be the best?
Yeah. Okay. So first of all, no one should be embarrassed that they do not understand what blockchain is, because no one understands what blockchain is, really. I think the simplest way to think about it is it's literally a timestamp that has your geolocation, the time, the date, and this is an authenticator, so that every single transaction, there's a known date, time, location for it. Effectively, blockchain. And then add to that that information is not held in one location, but is distributed to many participants so it can be authenticated and confirmed. So that's the simple way to think about it. And, blockchain is looking to do a public fundraising. I think they're probably going to do what Coinbase did and bypass an IPO, go directly to the public and, to put this in perspective, when Coinbase did this not long ago, they've only been created since 2012, and suddenly they're worth more than Goldman Sachs. So there's something huge happening here. And blockchain.com, which is based in London, is already valued at 5.2 billion. And I think that they are right when they say this is not about changing the value of money. This is about completely transforming the nature of the financial system. So money now becomes a mechanism for tracking everything that's happening in the economy. So that's one thing. Now, based on blockchain, there are many assets that are built. And so one of them are the many, many cryptocurrencies. Last time I checked, which is a few months ago, there were over 1,500 of them. And so Bitcoin is a bit like Hoover. When you say, I'm going to Hoover the vacuum, Hoover the rug, or I'm going to vacuum the rug, it's one brand name, but it's fundamentally, there are many of them. And I'm not convinced that Bitcoin is the one to back. I think that there are many, many things that are in motion now. And finally, all of this is based on the assumption that the smart contracts associated with these transactions are sound. And that's why there's been a huge event that happened, interestingly, in the art market. And I always think the art market's very important for investors to watch, because artists are the radar of society. Marshall McLuhan and Ezra Pound used to say that, and they are, and they innovate faster than anyone. So everyone will have heard of NFTs, these non-fungible tokens, and the famous Beeple that sold for, what was it, like 66 million. Yeah. Well, there's an artist called Monsieur Person, which means Mr. Nobody. And Mr. Nobody is what they call an ethical hacker, who hacked into that Beeple NFT and seems to have replicated it. And what he was doing was trying to prove that the smart contracts underpinning the NFTs are hackable. And if that is true, then the value proposition is not there. And I think it's really worth looking at this particular event that just recently occurred, because it's applicable to everything in this space. And that's the real question. Is the technology really capable of protecting the value of these digital assets?
Yeah, I had not heard about that, and that's actually that's massively relevant, because the whole part of blockchain, is these smart contracts, which in theory can't be falsified. But if they can be hacked, then that does put the whole value proposition of the technology into question.
Completely, and there's a term for it, which is super interesting. It's called sleep minting. So there's a new word of the day for the audience. Sleep minting is the word that describes this process of hacking into someone's authenticated asset, replicating it, and they don't even know it's occurred. So now there isn't one Beeple with that token number, there are two. So it's a profound question for the whole crypto space, and comes at just the very moment the governments are saying, hey, we want to do this too. And I think this is the big story, is that crypto doesn't mean private anymore. Governments are going to be issuing digital sovereign crypto. The Chinese have already begun with what they call the DCEP, and they're coordinating with many other governments. The British are talking about Bitcoin. Personally, that would be the one I would bet on, because if you take sovereign digital and then you wrap it in British rule of law, that's a winner, in my opinion. So there's, again, a lot of innovation that's occurring in this space before you need to study before you act, for sure.
Yeah, so many questions here to ask you about this and not enough time. So let me just dig into the last point you mentioned, which is the, world governments and central banks getting onto the cryptocurrency bandwagon. I think many people in this space have sort of watched the emergence of the cryptocurrencies with a bit of surprise, in the sense that before they came along, world governments would just step in and crush the smallest players who were trying to do anything that looked like printing a competing currency. I mean, even the guy in his garage would go to prison, right? He was making a couple of silver rounds. And they've let, the cryptocurrency ecosystem, grow and thrive. And part of me has said, okay, maybe they're doing that to let the private sector kind of do the heavy lifting on all the technological development and also do their pre-marketing for them, right? Get people to a certain level of critical mass of being aware and adopting cryptocurrencies. But then at some point, they're likely to step in and say, you know what, all those other cryptos, those private cryptos, those are for terrorists and criminals. So we're going to shut them down. But don't worry, we now have a digital dollar, or we have a Bitcoin or whatever. And boy, it has all the same benefits, but you can have confidence because it's backed by the government. Do you see that as potentially how things unfold here? Or as some people claim, who have been in crypto for a long time, the genie's out of the bottle, there's no way they're going to be able to stop the revolution?
Yeah, I think the genie is out of the bottle, but how it happened is so interesting. I think it initially began with arrogance, this view that it wasn't materially important, that it was small, and then it has suddenly become very, very large. And governments have gone, wait a minute, and now they know they can't stop it. But even more important, they've realized they want it. Now, why do they want it? I would think of it this way. Number one, a central banker I won't name put it to me like this. He said it's heroin for politicians because you can literally have or double the money supply in a single keystroke. It's not connected anymore to some underlying goal at Fort Knox, right? Number one. And number two, you can direct it to whoever you want. So for example, in China right now, the new DCEP, their digital currency, it literally shows up in your mobile phones. You wake up in the morning and it says you have $1,000 that you didn't have yesterday. And you're like, wow, that's amazing. Okay. And it's telling you can spend it however you want. That's their go-to-market strategy and how they get adoption. Well, you can also take it away. And now you can say, right, I want the citizens who voted with me on this issue to get the $1,000. And anyone who voted against me on this issue, we want to tax them $1,000. This is a whole new kind of governance system that will come with digital currency being run by the sovereign. And I'd go even further and say, in my opinion, the DCEP is effectively a surveillance system masquerading as money. And we should understand that surveillance capitalism, which is something we've talked about, but I don't know that people really understand what it means. It's not just the data you give off of on your internet searches. It's also now every single transaction will be a record of what you are buying, who you're buying it from, what time of day, what does that say about your personality? What does that tell a vendor about how to sell to you better? And so do governments want to have these tracking devices on their citizens? Yes, they do. And so they can be both incredibly profitable and incredibly challenging to our notion of democracy at the same time.
Yeah. So, to your list there, you can add that if the government suspects you of doing something it doesn't want you to do, it can just freeze your assets, right? Or take them or tax them. You might not need to submit your taxes anymore. The government will just tell you what it thinks you owes and just take it. There's all sorts of elements that, as you were sort of rattling off your list there, I think most people watching this were saying, dear God, I don't want to live under that regime. So, what I hear you saying is look, there's great advantages that it can offer, but there's also, potentially huge costs that could come to our privacy, to our civil liberties, et cetera. Is this something that you see us being able to avoid, or are we going to all be corralled into these state-sponsored digital currencies at the end of the day and be living under the thumb of big government?
Well, I do think that it will become mainstream. So you can say corralled, but there will be an adoption process and it will bring a certain ease. And I think that, yeah, it's coming and there's no way around that. What is required is some really hard thinking about what is the legal and governance system, the ethics system that ought to be used to manage and contain it and to prevent abuses of power. Like any new technology, like a car can be used to run somebody down, or it can be used to take the kids to school. All technologies can be used, they also always cut both ways. But what is not possible is to introduce this new technology and not give a second thought. It does challenge our notion of human rights and civil society in profound ways. the fact is, we already have, you have, I have, every listener to this already has a digital twin. And that digital twin is revealing more about me than I know about myself. The currency will be just one further additional mechanism by which that data is gathered and transmitted. But it's already in play from, everything I do, including just walking around with my mobile phone in the pocket. So this is the real question: is where is the thinking about what society ought to look like given this new technology?
Yeah. Gosh. Well, at first, I apologize for asking you huge philosophical questions that might be unfair to expect you to know the final answer of, but I appreciate you doing your best to kind of pontificate, giving your expertise. But very clearly what you're saying is that we as a civil populace really need to be engaged going forward, demanding of our politicians and our leaders that the types of responsibilities that we want them to use in applying these new technologies. Else, if we don't, we may find ourselves more corralled than benefited from, corralled into rather than benefiting from, where our currency goes based on all this. But super fascinating. And again, like I've got a list of questions here that I would love to get through with you on this, but we would need to have about 5 hours here to get through it all, I fear. So in wrapping things up, and thank you so much for giving us so much of your time, Pippa, this has been great. A lot of people watching these videos are, really trying to figure out how to navigate this system. And like I said, you're one of the more optimistic, sanguine, positive folks we've had on, which has been a nice breath of fresh air. So thank you. I think you've done a good job of articulating why you take that position. But these are people that are trying to figure out how to first preserve their capital during this time, and then prudently grow it. But they are worried that either inflation could really eat away at their wealth, or that if they position themselves long this market, and then there is a big correction because of potential overvaluations or the next black swan or whatever, that they could kind of become, collateral damage to the popping of a bubble. You haven't used the term bubble in this conversation, and a number of our previous ones have. So I don't think you think we are in one, but that's a fear that a lot of our viewers have. So my question that I'm taking too much time getting to for you is, do you have any advice, guidance, perspective to share with that viewer, the person who is working hard to squirrel away savings, but doesn't want to lose it all? If indeed we are, in a period here where things get awfully volatile.
Yeah. Number one, I think Warren Buffett had the best advice, which is the greatest investment you can make is in yourself. And so spending money on enhancing your education, your skills, your knowledge, your network, this is the number one thing that capital can go on, and then it can never be taken from you. So that's one. Number two is that markets are supposed to go up and down. In fact, it's not normal that they only go up. So a good investor says, if I believe in the thing and I'm buying it now, would I buy much more if it was cheaper? Yeah. So when the market goes down, this is your ultimate opportunity, right? This is not a bad thing. When the markets fall, this is your chance to really buy what you believe in at a much cheaper price. Unfortunately, human beings are somehow incredibly skilled at buying high and selling low. But the game is to buy low and sell high. So remember where opportunity is. It's not when it's going up, it's when it's going down. And third, if you are that worried, then you maybe are in the wrong game, right? You have to spread this out over a period of time. And that's true even for the people who, I have lots of young people, especially teenagers and people in their 20s coming to me asking about their investments in Bitcoin, where they've literally made millions in an incredibly short period of time with almost no money to begin with. And, I'm like, okay, well, how much have you made? Call it, 8,000%. That's actually a pretty good
pretty good return. Yeah.
Cash off the table, even if it might go up further, because you know what? It's a different bet now. Take some money off, reassess your risk tolerance, and then put a bet back on, okay, yes, it's at a higher price, but if you expect it to go up 50%, That's huge, right? Remember to be reasonable and rational. We are not supposed to be in a world where things just go up endlessly. You have to expect volatility. It's part of the game, part of being an investor.
All right, all great answers. Invest in yourself. Use volatility to your advantage. Keep some dry capital. Deploy it when valuations are more sane, and then keep that long-term outlook, rational perspective. Don't get caught up in the whole YOLO FOMO malarkey out there. You mentioned earlier that you believe that inflation is going to continue to result from all of the stimulus and liquidity that's getting shoved into the system. You briefly mentioned that you thought that equities would probably benefit from that, as would hard assets. Do you have anything you want to say about either of those asset classes, or any others that you think would benefit as well from that trend?
Sure, and maybe that's the last piece of the answer to the previous question. What would I be looking for? Genuine unimpaired cash flows. That's what you want to own. Now, who provides that? Frankly, a lot of huge traditional brand names that make simple things you find in every household. And that's not to be underestimated. The combination that they make things you need, and also they have strong brands, right? Strong brands are really about trust. And trust is a very good thing to invest in. So that's another reason stock markets are going up, because people are registering that they have more trust in private sector brands than they have in almost anything else now. They've lost their trust in governments. They've lost their trust in religions. They've lost their trust in almost everything. And so it's very interesting that money follows trust. So I would look at it two ways. Where do you see a genuine unimpaired cash flow that's going to make money no matter, even in a disaster? And second, where is the trust in society? And that is an investable phenomena. That's very much what my last book was about: how to build trust, how to find it.
And sorry, great answer. When you say your last book, are you talking about The Infinite Leader, or a different book?
Yeah, The Infinite Leader.
The Infinite Leader. Okay, great. Well, then two last questions for you, Pippa. First is, if folks want to get a copy of The Infinite Leader, where should they go?
It's on Amazon. Well, it's on Amazon. My publisher makes me put a copy of it so you can see it. But it's really also not for people who are, quote, leaders. It's for people who think they aren't, because in fact, we all are. We're all making leadership decisions every single day. Even as a private person, you're making leadership decisions about your own life. And many of your questions have reflected that. That's this need to decide which direction am I going in. So I'm always happy to chat with people about it. I'm very active on Twitter if anybody wants to meet me there, under @Dr. Pippa M, because no one can pronounce my last name, although you did.
Okay,
well
great. And that was the last question I was going to ask you, which, for folks that have enjoyed this conversation and want to learn more about you and your work, is there a place they could go to do so besides looking at your Twitter handle?
Yeah, I'm pretty active on Twitter. LinkedIn, I'm always available on LinkedIn. I put up articles now and again. In fact, for those that are interested in the history of replacing a financial system with a new one, I wrote a piece on LinkedIn a few years ago on tally sticks that you'll find there. And let's remember that when that huge transition happens, scary as it is, I know, when you say to people, we're going to change the whole financial system and get rid of the old one, people have a heart attack. But that set the stage for the Industrial Revolution, the greatest period of growth in modern history until now. And I think we're about to surpass what happened at that time without the downside. So there's an article there to maybe have a look at.
Wow, a great bold claim to end the interview on. Pippa, thank you so much. It's been a really fascinating discussion. Really appreciate you giving us so much of your time, and I hope we can have you back on soon.
Definitely, thank you.
We hope you enjoyed this interview with Dr. Pippa Malmgren. It was a really nice change of pace to get to speak in depth with an expert who's so enthusiastic about the opportunities ahead. And as we wrap up here, please don't forget to click the subscribe button below if you haven't done so already. And if you're trying to make sense of how to invest for the coming future and would appreciate a free, no-strings-attached portfolio review with Wealthion's endorsed financial advisor, we'll tell you how to do that in just a few seconds, so stick around. Thanks for watching. If you'd like to schedule a consultation with one of the financial advisors at New Harbor Financial, simply go to Wealthion.com. These consultations are completely free and there are no strings attached. The good folks at New Harbor will simply answer any questions you have about your investment goals or your portfolio and give you their best advice given their latest market outlook. They're willing to do this because they care about protecting people's wealth, and because Wealthion has connected them with so many thoughtful investors just like you over the past decade. We started doing this because so many people have approached us in frustration, looking for a solution because they're feeling out of alignment or downright ridiculed by the standard financial advisors who have been managing their money. You know the type. The kind that just pushes all of your money into the market, scoffs at the idea of owning gold, and when you bring up concerns about the market's sky-high valuations, they say, "Don't worry, the market will always take care of you." For many of the reasons discussed in today's video, we think this is one of the most challenging and treacherous times in history for investing. We strongly believe that today's investors are best served working in partnership with a conscientious professional financial advisor who understands the risks in play. Now, we're agnostic which professional advisor you work with, as long as they're good. If you're already working with one, that's fantastic. Stick with them. But if you don't, or are having trouble finding one you respect or trust, then consider talking to John and Mike and the team at New Harbor. Now, for those about to ask, yes, there's a business relationship between Wealthion and New Harbor, which we've put in place to make sure everything is handled according to SEC regulations. All the details on this are clearly provided on the Wealthion.com website. Also, it's important to note that New Harbor is able to work with U.S. citizens, green card holders, and those with existing assets in the USA. But for regulatory reasons, they aren't able to take on non-U.S. clients. All right, with all that said, if you'd like some insight and guidance on how to protect your wealth during this unprecedented time in the markets, go to Wealthion.com to schedule your free consultation with the good folks at New Harbor. Thanks for watching.